Joining us to discuss this is America's accountant, Dan Geltrude, Managing Director of Geltrude and Company. So how should people read this? Is there any positive in what's going on?
Well, sure. There are some companies that are actually doing well right now. And if you think about what would make sense based upon people's behavior, how about teleconferencing, because people are working from home, so you have Zoom video communication. That company has taken off because everybody's using Zoom now to basically telecommute. So that company doing well, and I expect a company like that to actually have this perhaps as a takeoff into the future as people get used to working from home now. I think that Zoom is going to reap long-term benefits. As you look at other companies, let's take a company like Clorox, doing extremely well right now, and they played the coronavirus perfectly. Why? Because they started to up their inventory levels right at the beginning of the year in anticipation that disinfectants were going to be in demand.
We have some in our office right now.
Yes, I saw some in the green room.
Exactly.
So it proves right there, everybody's wiping everything down. So again, think about how we're kind of changing the way we live.
Now, who owns Clorox?
Clorox owns Clorox.
It's not like Procter & Gamble or anything?
Right.
Okay.
So invest in those companies now, essentially.
Well, but, you know, the question becomes, right, is this good for some of these companies like a Costco? They're killing it right now as people are buying in bulk. You know, they're running out of toilet paper, you know, all the essentials because people are figuring they're going to have to be holed up for quite some time. So now you look at Costco, they're flying high. Is that going to, at some point, come back down? Kind of like what happens, you have a natural disaster, and Home Depot and Lowe's really have a surge because of the way people are buying. So you could have a situation like that with Costco doing very well right now, Walmart, Target.
But are those sales possibly taken from the future and you've just moved them up?
Well, exactly. So as coronavirus ultimately passes, are people ultimately going to keep their inventory levels
all
the same?
Of us will be going,
not.
Glad we got through that.
Or how about Campbell's? Campbell's soup. Good. They, you know, they're doing extremely well right now as people are looking at, well, canned goods. We got to stock up in case we can't get out, and they're reaping the benefits right now. So there are companies that are doing well.
The market is concerned, not knowing how people are going to respond to all of this. So when will it be safe to get back in the water for people to say, I'm going to buy a stock because it's going to go up?
Right now.
Now?
Right now. And the reason I say that is people were buying like crazy a month ago, so they were looking at stocks that they really liked.
At 29,000.
Right. And now we've rolled back down quite a bit. So if you like the stock at a higher price, why wouldn't you buy it on the way down, knowing that this is going to be temporary? Based upon the economic signals, what I am saying, this is due to what's going on with coronavirus and panic and worry, and the market will come back.
In the meantime, we got the economy numbers today. Jobs are up, unemployment's low. You know, how is this comparing with the markets? We're seeing kind of an opposite effect.
Yeah, there's clearly a disconnect. Again, it's being fueled by the emotion of the disruption, potential disruption of supply chains in China and other places in the world. Are businesses going to be able to get the products they need in order to be able to sell? So, you know, it's a tricky situation. But listen, here's some other good news for certain people and businesses. Interest rates coming down.
Oh, yeah.
Significantly. So companies are going to be able to borrow for capital that they need at a very low rate. Refinances. Right now, the market's going crazy for people to refinance. By the way, not great news for banks, really squeezing them on their net interest margin, right? Because as people are refinancing, right, not necessarily taking more money out either, by the way, just refinancing to get those lower rates, that's not great news for banks.
Well, you know, we've talked about the uncertainty, and that's why the market's down. But anybody that lived through the financial crisis knows it does come back eventually. So we've got final words, 15 seconds.
Look, we are not in 2008. The fundamentals economically are much much better, and I do not anticipate anything like what we had in 2008
All right.
to last.
America's accountant, he just gave me some advice on my taxes off camera. So it is Dan Geltrude, Managing Director of Geltrude and Company. Thank you for being with us.